Hello and welcome everyone to Gold Asset of the Day for the 30th of November 2022, presented by myself, Phil Carr, at the Gold and Silver Club. Buy on red days. That's the suggestion I'm going to make to you on today's report. We have just seen a Black Friday sell-off for commodities, followed through with a Cyber Monday super sale, especially on the metals such as palladium and also crude oil as well. In fact, we managed to snipe it in 3 positions on crude oil at the start of the week, banking over 1,000 points profit within 24 hours by catching a falling knife, as we then saw that capitulation later in the session on Monday, which delivered us over a $5 move to the upside on oil, 4% breakout that we saw just within the matter of 24 hours, buying just below $74 per barrel, which was an immense move for you to capitalize on. Everything that we talked you through to expect further volatility and big opportunities to sniper in at the lows for many commodities. In fact, palladium prices broke down over 2,000 points in the last week, bottoming on Friday at 1,800, delivering very quickly over a 700-point breakout to the upside. Again, now actually it's back down towards the 1,800 level. Again, many commodities, they've given you big opportunities to capitalize between now and the end of the month, and of course moving into a fresh month for December. So with that, as it relates to gold at the moment, 30th of November, what are we going to see? Potentially end of month profit taking. So you might well see further opportunities to again buy on red days. Remember, you don't want to buy in and FOMO when the market has already pumped over 500 points in a day, or if it's already broken out 10%. That's absolutely not the way that you want to be navigating in these markets and capitalizing on the day-to-day and week-to-week volatility right now. You need to be making sure that you're very precise, timely with your entries, getting in at the lower end of the cycles when you're seeing capital outflows, and then building out those positions at the lower end of the cycle, bricklaying in those positions in order to capitalize on these slingshot impulse moves higher that we keep seeing from major areas of liquidity. Now, it's been interesting in oil as it broke all the way down to the lowest levels in 2022 so far. We have seen commercials and hedges in the market yet again increase their overall net long position in the last week, getting more exposure on the long side, and as such we have seen a large breakout to the upside, over a $5 move from the low to the high in the last 24 hours. And of course, you may know the Joe Biden administration, they've already signaled to the market they're looking to refill their strategic reserves at $70 per barrel, but the market absolutely did not wait for that level to get hit. We got bid at the 73 level as we talked you through on the week ahead commodity report. Big opportunities to capitalize from that price action on oil at the start of the week. Go back and watch the week ahead commodity report we provided for you. We signaled out this very specific setup with energies for the start of the week for you to capitalize on. We saw all the energies, they gap lower off the back of China lockdowns that we saw throughout Beijing over the weekend, more lockdowns and protests, and as a result, oil cratered on the Monday open, but provided massive opportunities for you to get in quickly and capitalize on a red day. And now, of course, we've turned that red day into a green day with over a 5% and 500-point breakout to the upside here with oil. So again, going back to gold, over the course of this week, very specific news items you want to have on your radar. So on Wednesday, we've got Jerome Powell speaking. Alongside that, we've got further inflation data coming out on Thursday, and Friday is the big one, non-farm payroll data. That can be a catalyst for explosive moves, which is going to set the scene for the last FOMC statement of the year in the middle of December, where, of course, the Fed, from the minutes of the FOMC, they've already suggested that they're going to start to decrease the aggressiveness of their rate hikes and potentially pause or even pivot once we transition into 2023, which again, if you know what you're doing in these markets, you know that represents an absolutely immense opportunity. Goldman Sachs, Bank of America, JP Morgan, Citigroup, they've all been preparing their clients for this, and what they believe could be one of the biggest opportunities on commodities. As we continue to see, the dollar has cratered. After the minutes from the FOMC, the dollar absolutely cratered to the downside, and many commodities started to take off, especially the metals. You can just imagine the magnitude of a move as you go into the Federal Reserve interest rate announcement in the middle of December, the sort of explosive moves you can have off the back of that. You absolutely do not want to miss out. So with that, if you would like to learn the professional research-driven approach to the market, take advantage of this day-to-day, week-to-week volatility that we're seeing across the whole commodity space, make sure that you're utilizing data-driven cycles. So utilizing the daily, the weekly, the monthly, the quarterly, real-time data-driven cycles in the market Further compound that with the key areas of liquidity. Again, buy on those red days. Make sure that you're not FOMOing in and getting in at the top of the move. You want to be getting in at the lower end of the cycle to capitalize massively off these impulse moves that we're seeing day to day and week to week in the commodity markets. Further align that as well with the intermarket correlations, the ratios in the market, use statistics, data, market intelligence, then finally how the hedge funds, money managers, banks and institutions are positioned in the market in real time. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click on the link below today's report in order to make an application to join our professional mentorship program.